Good morning, traders. Today is now Monday, 14th of August, 2023. The weekly head of Nasdaq. The market is still bullish, even during the last week, as we had this area as the market had a correction, what was very expected, and now a lot of retail traders get trapped as they have already started to sell the market. The pro traders and defensive tech markets have bounced. In Japan, the market has opened with a powerful bullish gap up. Now here on daily chart, I'm going first of all to mention why the market will go higher first, and therefore we need to go a little bit back. Here on daily chart, we had already at the beginning of this year the first signal. While technically we see here that the market had a very powerful cup and handle formation, first of all, because at the end of a trend, if the trend is down and we have cup and handle formation and breakout, bullish breakout, it's the end of a short trend and starting of a powerful bullish trend. Especially here we see that we had in May until August also this cap and handle formation, and the market in a downtrend has started to form the first one, which was an indication that we will have a very strong support. And as we came more down, the market after a while at around 110, at around 10,000, build a very and confirm this support, and after a while we see that the market continued to go higher. Further, we see that these formations have been repeating themselves, like here, and finally here it was a breakdown. But if we continue now this pattern, so try it again, we see that we had at the beginning of the downtrend, so of the beginning of the bullish trend, we had still this very powerful formation, and it is repeating themselves or itself here again, right? So usually if we have a trend up, the first correction or cup is followed sometimes by a second cup, but the highs are low, are higher, right? You see here. Now sometimes if the market is building a bear trap before it rises much more higher, you see here, this is the first cup, this is the second cup, but the second cup is bigger and lays lower. But generally on the major trend, the market jumps much more higher into new eras. If we go back, we see now that also here 2020 we had already these formations, but the market participants use this formation to buy much more heavily, or see here. Right? And then for a period of time, around a year or something like that, we have here the neck, we have the cup. We see that the market is in a correction phase. So this is assimilating that the market will break up this level and to go to the first target at 17,000 and then to 23,000. If we go now to my Tradingview, you need to be subscribed in Tradingview. You guys see that I have already published, especially about Nasdaq, for new trading levels on daily, on 30 minutes, and also on low time frames. And we see here that from the May of the last year, the market came down. We have a big cup and handle, and in this, among these cup and handles, bullish cup and handles have been built. And especially here, we see that we started a bullish trend at 11,586. These green areas are more entry signals, and the trades are all open. And also last week I have been buying Nasdaq at 14,815, and today again at 15,053. We see that we have a special formation that the cup and handles which are decreasing are trend confirmations that the momentum or bullish momentum is rising higher, right? This is the trend. And these are the formations on the market. Fundamentally, everything is speaking now that 95% of all traders, sentiment of the traders are the opinion that the market or the next FOMC meeting, we will have no interest rates hike. Last week we had CPI and very strong PMI. It was not so strong, but has been beaten some way the expectations of the bears, and therefore the market participants started to sell the market to take some profit, and instead the buyers have used this very good opportunity to accumulate. Now we want to analyze how the market profile is moving along, and we can see that in a downtrend, while the POCs are decreasing. In an uptrend, we see that the POCs continuously are moving higher, like here. So we see the move from this POC to this one is higher, the next one is higher, then the market moved higher and found at around 16,050, low volume. It was very logical that the market came back to the last POC, and in the meanwhile the next POC, you see here, the next POC is higher than this one, so this is an indication that the market maybe comes again to around 14,800 something before it moves up to complete this imbalance, because it fell sharply and then to go higher. At the same time, we see that the POC, that the volume profile is building higher volume shapes at the top, and this is an indication that we are going now to fill the gap at around 15,850. The gap here, the market came down because we had a gap here at around 14,780 area, right? Something like that. So this was the gap, and now the gap has been filled, and now the market continues to fill this gap, and then we'll come back again to around 15,450 before the market starts to break this gap and to fill the next gap at around 16,250. So if you're gonna make some short trades, be careful of a trap of the bear trap, because the bears want you to think the market will crash now, and then they will buy the market very low to go higher, and then you will lose money if you go short. So wait a little bit. On 5-minute charts, you see that the market has, this was the close of Friday and this is the open of today, and we have a very big gap here, and you see the market is going now to fix this gap. It's on the same time the POC of Friday, but the POC of today, of this week, is above the weekly open. So we see after a series of falling POCs, now the market has turned and the POCs are going upward. So also, if the market is coming a little bit down, maybe in the European or US session, so something here, you see my buys. We have here very low volume, and this blue area is the very strong gap support which has been filled already. And if the market is coming here, we will have maybe some consolidation. And also in the worst case, if the market is going down below 14,600, we have the next very strong buying support at this level, which I have already mentioned in earlier in this video on daily charts. So these are the key levels, right? So a lot of traders are making the mistake that they have learned buy support, sell resistance. It's not true. If you see here at these levels, these are the local supports, resistances on lower time frame, and they have nearly no meanings. The most very important levels are on higher time frames, supports, resistance, meaning if we have an uptrend, let's say this is the higher time frame and these are my support levels, then this is, for example, the daily, and this chart is 5 minutes. So we take this picture and we know now the next move may come down to this level, and if breaking maybe to this level, what can we do? Here is now the seduction of going short to say, okay, I take this move and then I buy it again, and this is something very silly. It is an idiotic and money losing way of thinking as trader. Instead, the correct way will be going to the lower time frame to wait until the market is coming down to this area, and then as you can see, now the market is starting to go up, and then we have the next confirmation that the POC is going higher. The general trend is long, so our strategy will be we only buy the market, we never sell. We wait until the market reaches these levels, and then the confirmation on low time frame will be we buy the market. And this is very synced to the higher time frame. Here we are long, and also on low time frame we are long or bullish too. Why this? Because it has only a reason, a fundamental reason, that the trend on higher time frames are going up, right? It's not a lottery or it's not a casino, it's business. So if the market is making continuously higher highs and higher lows and increasing or higher support, it means something. It means that the market wanted this market, or the market, powerful market participants want to have this market much more higher. So they are putting billions of dollars in this market, right? So they want to have profit. So why should they sell? And also vice versa, if the market is falling, someone is selling because they want to protect their profits, or there are some inside information, whatever. And if you go, for example, here, or even here at this level, or even here at this level, or here at this level, now in the market, and we trail our stops below this level or below this level, right? And the market rises higher, we have much less risk. Instead, if we go short here, or still here, or still here, and the market is building very bullish volume, bullish delta is coming, fundamentals are bullish, so that pro traders use the charts only for timing, right? 90% is waiting and fundamentals, volatility, and 10% of trading is only chart, and this is timing. And this is exactly the place where the big traders time their entry and push the market higher. So Nasdaq will go up. Nasdaq will go to 16,050, then 16,250, 17,000, 21,000, 23,000. Then we will have a correction back to around 19,000, and then it will rise higher. Have a good week and have a very profitable week.